We have a fair value gap here, and then we have the fair value gap here. So it's better for us to focus on using 3-month time frame. Is much clearer. So fair value gap here, fair value gap here. We go to monthly. There's a fair value gap there. There's a fair value gap here. We scale down to weekly. On the weekly, there's a fair value gap right there. So if we see a mitigation right here and we see a 1 hour break, we'll be looking for buys. And if you even scale down to daily, you can see that we came and took liquidity and we mitigated the daily fair value gap right here.
Yes, sir. Yes.
So we can also use a 30 minutes break of structure. That's what that means.
Yeah. Yes.
And right here is our 30 minutes high. So after this mitigation, after this break of structure, we want to see a mitigation. Now, the market came down, mitigated here, this fair value gap, but that didn't end up taking us to a new all-time high. So this low became suspect, sell-side liquidity.
Price has taken that low.
Yes, and already the price has taken this sell-side liquidity. So anything can happen from this low. Anything can happen. The market can literally mitigate maybe a fair value gap, down close candle, and reverse and continue high. Anything can absolutely happen from here. We've taken liquidity. We've mitigated the fair value gap. Anything can happen in here and take us to continue high, to rally. So the only thing we do, what I do in cases like this is I just go to 5 minutes and I look for a 5 minutes high and low, and I just wait for a break. So once this low gets taken, if I see a 5 minutes high break, I'll just buy. So
and this the 5 minutes, okay.
So right here, this is 5 minutes. So right here is 5
And this is the
minutes.
overall high.
You can see a high, a low, a high, a low. So if it breaks this high, we test it. I can literally just use that as a break of structure and look for buys. You can see a high, a low, a high, a low. So if it breaks it, I can look for a retest. So even if it breaks it and then runs the low again, I don't care. I'll still look for another break of structure in 5 minutes and buy it. Remember, everything here is our point of interest. From this candle here to this low is our point of interest. That's our entire buy zone. Everything here is our point of interest. Because this is the last down close candle. Last down close candles. So everything in here, price can mitigate anything, reverse, and then next thing you see is a big up close candle that will not even give you opportunity to buy it anymore once you miss it. So that's why I'm just saying, just try to remove too much precision sometimes. Even though I would prefer to see this opening range gap get mitigated, but sometimes the market may not have the momentum to come down that deep. So to avoid you missing trades, you can just wait for your time frame break of structure. Already, if you want to just, you can even do it this way. You can do it this way. This last down close candles, you can see that
Yes,
it's a 4-hour time frame, last down close candles, right?
Yes, sir.
Because if you go to 1 hour, yes.
Okay.
So if you go to 1 hour, you can see it's a little bit confusing. It went down, up, down. So you don't know which one to use. But 4 hour, it is very clear. This is the last down close candles. You can literally wait inside here and wait for a 15 minutes break of structure and just keep it that simple. And 15 minutes break of structure is this high. This high right here. You can literally put an alert here. If the market breaks above this high, you just use this high as your entry and buy it.